Hi everyone, this is a technical analysis on gold. Let's start with some fundamental background first. Yesterday we got another hot US CPI report, which pushed rate cuts expectations further out, with the market now pricing in less rate cuts than the Fed's dot plot. The real yields and the US dollar rallied strongly as a consequence, which put downward pressure on gold. The usual inverse correlation with real yields broke down recently, with talks of heavy central bank buying being the possible culprit. It would have been just simply a momentum trade, though, and the CPI report might have been the catalyst that marked the top. In the big picture, gold should remain supported as we head into the easing cycle, but in the short term, the hawkish repricing and rate cuts expectations should weigh on gold, especially if rate hikes start to be put on the table at some point. Now, on the daily chart, we can see that gold have been rallying into a new all-time high with almost no pullbacks along the way. From a risk management perspective, the buyers will have a much better risk reward setup around this trend line, where we'll also find the red 21 moving average for confluence. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets into the next major trend line here around the 2100 level. On the 4-hour chart, we can see that the latest move higher diverged with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it could be a signal for a pullback into this trend line, where we can also find the 50% Fibonacci retracement level for confluence. The sellers should pile in on a break below this minor trend line to position for a drop into the trend line. The buyers, on the other hand, will likely step in here with a defined risk below this minor trend line to position for a rally into new highs. On the 1-hour chart, we can see that we have this counter trend line here around the 2352 level, marked by this green box. If the price were to break above this counter trend line, the buyers will regain control and we will likely see a rally into a new all-time high. Conversely, if the price were to break below this cluster of trend lines around the 2334 level, the sellers should pile in more aggressively and extend the drop into this trend line at 2267 level. Today we get the US PPI report and the latest US jobless claims figures. Tomorrow we conclude the week with the University of Michigan Consumer Sentiment Survey. Strong data is likely to weigh on gold, while weak figures should give it a boost.